am William Spargur. I own a tax accounting firm here in this building. I've been self-employed for about 4 years now. So if you're interested in becoming a tax client, I am familiar with cryptocurrencies and legalities and taxation and all of that. So this may call and make an appointment if you'd like. My contact information is on some of these forms, and just take those with you and call me at your convenience. Excuse me. I've been investing in cryptocurrencies since about earlier this year, since around July. I've known about Bitcoin since it came out around 2009. Fortunately, unfortunately, I've never invested. I never kept anything. In 2013, I actually started using Bitcoin, but again, never invested. Boy, I wish I had. I'd be a millionaire. We all would be. If anybody could read the future, let me know, because that would be very important. I do have a very sizable portfolio. I'm invested on several different exchanges. Sizable is a matter of relevance, I guess. So I'm not providing any investment advice today. This is all just a matter of information. Answer your questions, see if you have anything that you want to talk about. And if you continue to participate, you agree I'm not liable for anything that losses you may sustain. So just keep that in mind, that anything that you decide to take away from here, this is only information, no advice. So it's up to you to keep track of everything that you do when you trade. So like you said, when you're transferring Bitcoin from one exchange to the other, that's not a taxable transaction. When you convert that Bitcoin into another, like say you buy into Dogecoin or something, that it actually is a taxable transaction. The IRS is not specifically allowing like-kind exchange treatment on these coins.
So when you're sitting with somebody, you have to print out, so like say you're a day trader and you make a few hundred trades throughout the month, you have to print out like an Excel sheet of every single trade
You
that
need
you
to
made?
keep track of them some way.
Can you not just, I had a friend that's doing a lot of it, and he said, oh, well, you just, if you put $5 grand in, and at the end of the year you got 10 grand, you pay taxes on $5 grand.
That's a simple theory, and that's one I would like to subscribe to, actually.
Because it's next to impossible.
And that's the problem.
When you're
yes.
doing it on 20 different exchanges, on like, for example, Coinagene, you're bouncing around, you just press a button, you don't know what exchange it's going to almost, because it's going to,
Right.
well, you know what exchange it's going to, but
Right.
to track it all and pull it back into it, there's no software that does that.
There's software coming that does that.
So on that too, so say you take that $5 grand, you've made 10 grand by the end of the year. I've also heard that you can subtract your losses too. So say you were in the red 1,000 throughout that year, you can claim that loss as part of that $5,000 gain. So it would technically be $4,000 that you'd be taxed on instead of $5,000.
That would be correct. So any kind of sale that you have is going to be offset if you have a loss to any gains that you have, and they're going to net out to a number. If that number is more than $3,000 of a loss, you can only deduct $3,000 and carry the rest forward. That's the capital gains rules.
Gotcha. So can I expense everything, can I expense my travel to this meeting on that $5,000 profit?
This is not to be considered investment advice. You are allowed to deduct investment advisor fees. So run
So
with
what
the
if
wheel.
Well, no,
There's-
expense to.
There's been some people within our group who have discussed forming an S corp around yourself
Right.
and running your trading and profits
That's-
through an
that's-
S corp because of the taxes of the
Right.
capital gains tax.
I'm going to run this through my business, not as a new business, but as part of my existing business. So any kind of profits that I have or any kind of fees that I have, I'm going to expense it through the company. The mining equipment that I bought, I'm going to expense that through my company. Because I'm going to be reporting as well, because I'm not going to hold anything back. I'm going to try to comply as much as I can.
What's the exact difference between running it through a corporation versus, just cashing it out to your?
Well, running it through a
personal
corporation, you can deduct all expenses, including travel to here.
You can?
Yes, if you have a business, or if it's a business activity. If you're a sole proprietorship, you don't have a business per se, you can still report as a sole proprietor without a business name or an EIN number or anything like that on your personal return.
Oh, really?
The expenses related to this, as long as you're reporting, the activity on your capital gain schedules.
Gotcha.
Okay.
So it can be quite complicated. And the example of putting in $5,000 at the end of the year, you have $10,000 at the end of the year, or $5,000 beginning, 10 at the end. Yeah, you simple enough, you can say I made $5,000 and put that on there on the return and say Coinbase, for example. What the IRS wants to see is each individual transaction.
And that's, so like how does, like the Republican tax bill that was just passed, how does that affect it?
It doesn't really. I mean, for high income people, you're going to pay more taxes on on higher income anyway on capital gains. It's called the investment tax, the 3.9%
Right.
net investment. So you're going to have to deal with that if you have a higher income. If you have a lower income, and this is the best part about all the capital gains, if you have gains, if you're in a 15% or 10% tax bracket, well, that's going to be lower next year, but you actually have a room for tax-free capital gains up to a certain point, up until you get to the 25% tax bracket. So if you have room there to get to that next bracket, that amount of income that gets you there, if it's capital gains, is tax-free. And then the amount above that is taxed at the 15% long-term, or if it's a short-term gain, at your nominal rate. So that's another reason you might want to keep these for a year,
Right.
because they get the long-term treatment.
If say you got $5,000 of a Bitcoin, and then you switch it to Litecoin. And
That's a taxable transaction.
That's a taxable transaction. Then you go back to Bitcoin.
Another taxable transaction.
That's taxable, but you can't consider, if you want to go back to the original property.
Right.
It's.
Well, again, they amended the code to go away from just saying property, they amended to read real property, as it applies to like-kind exchange.
So it's real property now?
Yeah,
Okay.
When did they change that? Sorry.
just recently,
Okay.
just because of the cryptocurrencies, I think. But I don't know if it was in the works before that or not, but it's a very special, I think it came with the update and the new tax code.
So does that apply to the stock market too, like day traders?
No.
Like,
Well-
is it considered like?
Well, if you trade from one stock to the other, how do you do it? You normally get the cash first, right?
Right,
Yeah.
okay.
In this case, you aren't getting cash, you're getting some other currency, but it's considered cash.
What type of corporation would be the best to run it through?
You have to set the consultation with me. It depends on what your income is, how much income you expect to generate from this, and a whole host of other factors, how you file, and all that.
What about mining, when the coin is generated?
That's where you can deduct the equipment as operating costs, but you have to report any relevant income that you get from it as well.
So if I mine Bitcoin, they give me one Bitcoin in a year for $15,000, is that taxable?
Yeah,
Even if I'm still holding it?
yeah, well, yeah, because you have the ability to now spend that, the way you have constructive receipt of that.
So
fund.
even though I'm holding it for over a year, I'm still have to pay tax on it?
It'll be long term at that point though, if you, well,
Say I hold it
no.
forever, do I have to pay
No,
tax?
when you initially acquire the coin, they gave you your one coin, you mined it and all that. That's a taxable transaction when they give you the coin, because it's seen as, it's not you're buying into it, but it's still a transaction. So whatever you do with that money at that point, so let's say you go trade into something else, well, you don't have, well, now you have another basis in this new coin now, that you're gonna then base any gains or profits off of. So it's kind of weird that they did that, and I hate the fact they did it, because I was depending on the like-kind exchange treatment myself. But it's just not gonna be there.
What if you've purchased some currency before the end of the business year and haven't even sold it, it's still in that format?
Then, no,
Nothing,
you're just holding something.
just holding.
Right. And then when you sell it, if you ever sell it, or if you actually donate these to charity as well, and get a deduction, that's another consideration. If you don't want to cash out the profits, you can donate them to charity. Lots of charities are now taking cryptocurrencies, believe it or not.
And can you once again explain how the gains, the short-term gains, what if they actually change your tax bracket slab?
Well, then you pay more tax. Yeah.
Question, so if you have a business and you're doing this also as, a side project or as part of your business, whatever, from the profits, could you buy things for your business? Could you put it towards a building? Could you
Yeah,
do things like that, creative things? obviously?
within the business.
Yeah, within the business,
As long as
to
you're-
make it bigger.
Yeah, as long as, yeah, I
Make
mean,
it better.
if anybody wants to invest in a mining operation,
So
let's do it.
basically-
Let's set up a company.
So basically, I could say, hey, I want to give 30% to the government, I should just start a business and I want to start it.
Well, you still
something.
pay tax on profits, depending on how you're
Right.
set up.
Well, that's, yeah. Okay, well, yeah, okay, that
Yeah,
makes sense.
so the option that you could be an S corporation, an LLC, and C corporations are actually coming back into favor now with the new laws. So next year, that might even be another option.
So there's members of our group who have discussed moving their Bitcoin profits into like art, for example, and.
Into art?
Yeah, like appreciate art that appreciates in value
Okay.
over time, so it's more stable. Is there, what kind of, like, so that's similar to like if you were to buy property with the profits.
Well, yeah, but you're not trading property for real property though. So when you cash out whatever coin you have to buy the art, the cashing out of the coin is a taxable transaction. You have to measure gain or loss on that.
So the art community actually that's why they do it with the art community, because the art community accepts Bitcoin.
Great, you can pay directly, and then that's where it gets complicated.
Yeah. I think that was like one of the ways they were trying to skirt that whole situation, is because you just pay for the art directly with the Bitcoin.
Right. It's going to be opened up to your accountant on how they want to interpret the laws.
I was also, same scenario, was told you could convert it to gold, and it's not taxable.
You can convert Bitcoin to gold.
Yeah,
I haven't heard that, and
because
I would,
gold is not.
if you buy gold directly with Bitcoin, you mean?
Yeah. There's a change
I don't
to the
know.
offer, they're saying it's a non-taxable gain.
I would have to look into details on that, because I don't necessarily, with the terminology of the law, agree with that, but maybe they found something, a loophole.
At the end of the year, let's say I've got like a $2,000 profit on Microsoft stock, and I've got a $1,000 loss on cryptocurrency. What's my taxable income?
For capital gains purposes, it's the 1,000, doing that. But again, if you have losses greater than 3,000, those are considered still capital losses, and you can only deduct up to the 3,000. And then the rest is carried forward, yeah.
Yeah.
For example, if say you have a loss, or you get in a year, you want to, you think you're gonna be in a higher tax bracket next year, and you dump some and buy it right back a minute later. Does that
Well,
count that transaction in the prior year?
That could be considered a wash sale. They haven't really defined that specifically to cryptocurrencies yet, but as far as stocks go, I believe it's either 30 or 60 days. So if you rebuy that stock,
30.
is it 30?
Yeah.
I couldn't remember right. So it's 30 days that you have to rebuy that, and then you can't take the losses on that, because they know what you're doing. They know you're doing exactly that.
Do you currently have any cryptocurrency clients, or is this a brand new thing for you?
Actually, by publicizing this, I found out I have several cryptocurrency clients, and I've gotten a couple into the cryptocurrency game. One right there, he can tell you.
You were saying that this is all autonomous.
The blockchain, yeah.
How can South Korea, Australia, etc., shut it down?
They can shut down, not the blockchain,
But the internet?
The exchange.
the exchange or the company, like if it's given the ICO, for example, like if they're based in South Korea, they can't do that because they outlawed it. But
Okay.
if there's an ICO based here,
They can't.
they can't go get somebody from Europe or anybody. I mean, maybe they can.
They can shut the exchange down within like South Korea, which actually is meaningless. All that
Right.
does is create
More demand elsewhere.
More demand elsewhere.
Right,
That's where
absolutely.
it comes in. Got it now, I understand.
It's not meaningless if you have your money there, though, because they lock up your money.
True.
That's the problem. So
Okay.
any government goes in and shuts down an exchange, they lock down your funds.
Yeah.
And that's one of the risks that you're going to get into here. That's why I mentioned the governments are mixed on all this because of that. Because
It's wiser to buy on an exchange and then transfer it to a hard wallet, or get it off of that exchange.
Get it off an exchange.
that's why I got the hardware wallet, because I want to get everything I have off the exchanges.
The only reason for keeping it on an exchange would be if you're trading it regularly.
Convenience, right.
But if you're just gonna hold it long term, you would switch it to something like a hard wallet.
And then when it comes time to make an exchange, you go to an exchange that's available, not free.
Right, you have to transfer it back into the exchange that allows you to convert it,
Yeah.
and then you have to convert it again to currency somehow.
Yeah.
So you have to convert it to maybe Bitcoin or Litecoin or one of those major ones, get back to Coinbase and cash out there.
If you buy on Coinbase, for instance, you transfer to a hard wallet like Trezor, something
Mhm.
that you want to keep in your, and you also want to print that paper wallet, put it in your safe in case you pass, and your family needs to get their hands on it.
That's important, yeah, because if somebody that could inherit it, they need access. I've been thinking about that recently, because I'm single down here in Florida, and my family's all up in Indiana, and I'm like, well, if I die tomorrow, nobody's gonna be able to get that.
It recently happened to somebody who has a Coinbase account, that their son passed, and they saw that he had transfers from his bank account to Coinbase. So they contacted Coinbase to say, hey, my son passed, and we see you made transactions, and they said, sorry, we can't give you
Wow.
that information.
Even with the next of kin, or didn't work.
I will
Wow.
not give you that.
Because they're not
Gotta
really
have the
subject to
keys.
U.S. laws or any kind of laws.
They're in US.
well, they're in US.
Yeah, they're based in San Francisco.
But most exchanges aren't based on US law, so that wouldn't surprise me in any way that they would be that way normally.
Hard walk's the way to go.
It is, yeah.
Yeah.
There's a company coming out, which I'm looking at, allows you to, when they've already got the credit cards where you can spend,
Oh,
every
yeah,
cash
Sure.
on that, is, now are all those transactions taxable?
Very good question. Wow. I would think that,
Can you repeat the question again?
There's a company I'm following, it's called Blvd or something like that. You can use your Apple Pay to deduct from your crypto account. They're in ICO stage right now, they're gonna be launching.
and that's going to become common, actually.
Yeah,
Very.
that's gonna become, I mean, that's the original purpose of the Apple Pay and the
Right.
Google Pay, was to get rid of the credit cards. Regardless, they also have credit cards now, which is, what was that one called? Shift, where you can actually get a credit card, and when you swipe it, it comes out of your Coinbase account.
Apple just locked down this morning a lot of these, though. Apple just refuses to deal with them.
Yeah,
And-
MasterCard shut them down.
That doesn't
too.
surprise me.
MasterCard shut down.
MasterCard shut
No,
down.
Visa or somebody shut them off nationwide.
Visa, yeah,
Worldwide.
Visa this morning.
Yeah, one of them got shut off,
But
and they're complaining.
They're going to, they're gonna find a way to do it, so if I go and buy
Absolutely.
another copy, do I have to track that for my tax purposes?
As the way the law is written now, I would say yes. You would have to, say you want to get a $5 cup of coffee at Starbucks, and you want to pay whatever in Bitcoin or whatever the equivalent is, you would have to manually figure out what those Bitcoins are worth at that time, what your basis is in that small amount of Bitcoin, and report a $2 gain if that's what it is. But it's a small enough that it probably wouldn't matter.
But if I talk to the common person about Bitcoin, then is that a business knowledge?
If you have a Bitcoin consultation company,
Just so happens.
good idea though.
Alright,
Yeah,
just
but-
ask.
I have a question. So, let's say obviously if I'm on Coinbase, I've read the website that they actually will report transactions over $20,000.
Yes, the IRS successfully
To the
petitioned for
IRS,
this.
and, they'll give them the information, whatever. Then there's obviously other platforms, such as like, I use Binance a lot.
Yeah.
And that's out of China, and so I'm thinking, is the US working with Binance? Probably not. I mean, I don't know.
Only if they would have a
But-
U.S. physical presence, or if it were in a U.S.-friendly nation.
Yeah, but I'm gonna probably think that I can do all my trades on Binance. If I ever get audited, I just say, this is what I have,
And that's the thing, nobody can really tell you what's going to happen.
Yeah, exactly, and I don't think,
And how can the IRS tell that you're, yeah,
how are they gonna see all my
all
daily
of
trades?
those, yeah,
Like,
we
literally
trade all day
hundreds.
long.
Yeah, like,
I will tell you that
I probably
most of the
have
agencies and the firm
hundreds
buyers
of
that
trades
audit you are
Yeah,
not very
me too.
smart.
so I think just
At
keep
least
it
the
on
ones I know.
Binance.
Mhm.
Yeah.
Take it from Coinbase, keep it on Binance, and
They're working with
Just go that
something
way.
about some kind of software that just scans the blockchain. And what my understanding was that their software just scans all the blockchains and collects all the addresses, and then as soon as you attach your ID to an
Yeah.
address, boom, it tags it to your.
Oh, yeah,
tax ID.
I would not be surprised if that's already in place.
Yeah. and
Yeah,
they're-
that's-
so the idea is if you were to do that, never, when the autonomous blockchains, as soon as you transfer it to a Coinbase wallet, it attaches to you, that they know.
oh, I see.
Well, that's the good thing about a lot of these exchanges, though, at least maybe with, you can generate multiple addresses for
Oh,
the same
yeah.
type of currency.
Yeah.
So use it once, and don't
Use
think
it
you're
slowly.
getting to it, and then, yeah.
How do you feel about Bitcoin IRAs?
I tell you what, I don't know about Bitcoin in general, but I was thinking it was kind of going downward a little bit there when it was down to 13 to 12. It was going to maybe keep going down, but it shocked me that it rose back up this quickly.
Really?
Yeah, but I see if it gets up to 20,000 or more, I think it could get up to 50,000. But the IRAs, I know they have those now. Merrill Lynch is actually, they can't trade in those though. And I don't know if any of the other mainstream brokerages are going to be offering those or not. Do you know of any that are right now?
Yeah, Bitcoin IRA, I do have one right now. Yes, and you
Who's
could-
it through, though?
Yeah, you could pick from 4 cryptocurrencies, but the other ones,
Bitcoin
no.
IRA.
No, they-
Oh, okay. So
There's
that's
also,
okay, sorry.
like, you could also do what's called a, correct me if I don't have the right term for it, but
Self-directed
self-directed
IRA.
Roth checkbook
Yeah.
IRA, and you could roll over a 401k into something like that, which they would basically create what seems like a shell company.
But who's the
for
company
you.
that does that for you, though?
I don't know, I think there's certain people in California.
And that's kind of the problem right now, and I'm not gonna knock them at all, because I don't really know, I haven't looked in too much into them, but you don't have Schwab offering this to you, you don't have Merrill Lynch offering this to you. It could be some run-of-the-mill company that you've never heard of, based in some other country. Do the research on it and find out what they're all about. If they have a customer service number, call them, talk to them, ask questions.
Well, they're gonna give us a live Skype call for our
Good.
group coming up on the 16th, if you'd like to come, so.
Actually,
You can
yeah,
ask
let
them
me get your
questions.
card afterwards. Yeah, I'll be interested in learning much more about that.
We were discussing setting up something where we would help local businesses create like Bitcoin, like allow local businesses to accept Bitcoin or whatever in their small business. But when it comes to like the accounting side of that, like QuickBooks and stuff like that, how would you tie that in to their current like payment process systems that they use?
It would be very difficult. I would have to actually see it in operation first before I could be able to give any kind of knowledge about it. It could probably be done. I know QuickBooks very, very well, and it's very flexible. You can do a lot with it. I'm sure there would be a way to integrate that pretty easily.
Let's say if you accept Bitcoin at your business and someone pays you in Bitcoin, and then from there, that day, you sell your Bitcoin to yourself.
For more or less?
No, for the same amount.
Okay.
For the exact same amount.
That's okay.
That's okay.
You record the transaction as income for whatever the value is, because you're obviously going to charge them whatever the equivalent at that time. You're not going to be fluctuating. It's going to be whatever you calculate.
Perfect.
And then you record that income in the business.
That
Take
was
it as a
worth coming.
distribution to you. Well, you take it as distribution to you,
Perfect.
the money. So it's a journal entry, but yeah, it can be tracked. You have one or?
Another question.
Okay.
Same scenario, because I actually had a scenario like this before, and I was curious. If somebody comes in and say they buy something for $1,000 in Bitcoin, and you put it in your business Bitcoin wallet, and then, in the month, and it's worth $2,000.
That's appreciation, so that would be a capital gain.
But,
Well, if you sell it.
well, if I want to sell it to, convert it to cash, can I not convert it to cash to $1,000 the business is expecting?
We can convert half of it to the 1,000,
Yeah.
and then take the other half.
As I guess it's-
Well, then you have the 1,000 is still income. Well, when you take Bitcoin, it's a taxable transaction. It's taxable income to you to record as revenue when you get it for whatever value it's worth.
Okay.
And then from there, the depreciation is a capital
It's capital
loss or gain.
As long as you don't put it out.
Right. Well, yeah, when you convert it out, that's when you transfer half of it out, you report 500 or half of it as basis, and then twice as whatever the gain, and you still have the remaining half. So it'd be a little tricky. Now you guys are raising some really tricky questions.
That's where we came.
I'm glad I can answer some of them. Anything else as we're talking about this? One other thing I want to point out about the software is, if you don't want to use any of these and you're an Excel or a Google Sheets person, there is a great script out there. If any of you have seen it, I can show you it on my laptop, it's on my phone. It's every time you open it, you can customize it for whatever coins you have. It's great. It just takes a couple minutes to run through the script because of all the coins that I have. But if you have a lower amount of coins, it'd be great to just open up Google Sheets anywhere you are, have it on your phone, and it'll update and you can track it. It's not as convenient as one of these apps, but it's a lot more flexible. You can create your own charts and graphs, and you can track your own however you want.
Most of
What's
the
that?
exchanges
What
will
is
let
that?
you, most of the exchanges will let you just export a CSV file from the exchange that just records all of your.
Right, but that's only one file per exchange, and then you have to do all the customization yourself of what interface you want to see, and then you have to combine them all in a single spreadsheet.
Right.
So the tracking for tax purposes, though, can be a lot more difficult. We touched upon that because you have a lot more numerous transactions if that's what you're doing. But again, you can deduct your expenses if you're a day trader. You can deduct them as a business, any kind of meetings you have, any kind of mileage you might have going to seminars and things like that. That would all be deductible. It could be a full-time, with all the information that's out there, it could be a full-time job apart from any other job that you might have or day trading in regular stocks. So when you do your research, there's actually no balance sheets, there's no tax information, there's nothing that you're looking into. It's just all on the sites that we touched upon earlier. So it can be very, very, very harrowing trying to find the information or trying to get what you want because all the information just isn't out there in a convenient spot.